Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Victor Adair, co-founder of the Polar Futures Group. He's Senior Vice President and Derivatives Portfolio Manager at PI Financial in Vancouver. His website, PolarFuturesGroup.com. Welcome back to the show, Victor.
Well, thank you for having me back, Jim.
Well, after hitting all-time highs not that long ago, the markets have been super choppy. What's your take on the equity markets?
Big picture to start with, we've had a bull market for 9 years. We have not had a bear market in the major U.S. stock indices for 10 years. And I thought that the, let's call it the last leg, that would be from about the summer of last year right through to the rush we had in January, that the market had sort of gone parabolic to the upside. People were rushing into the market. The expression FOMO, the fear of missing out. I thought the market had got way overdone. I think the last time, or maybe the last two times you and I talked, I quoted the famous Merrill Lynch technical analyst Bob Farrell. He used to say that the public buys the most at the top and the least at the bottom. Well, it certainly seemed like that was what was happening. There was a terrific rush of capital into the stock market in the month of January, and then we roll over. Now, the breadth had been very narrow. In other words, there were just a few stocks were really, running away to the upside, taking the rest of the broad indices with them. And no surprise, in some way, the stocks that have been going up the fastest or the most so far have been down the hardest. The tech stocks certainly big winners to the upside. Now the most under pressure. I mean, day to day, since the break in February, we've had lots of reversals. In other words, down hard one day, up big the next day. Volatility is about double of what was last year, and last year was the year of complacency as far as volatility was concerned. The market just sort of trudged higher. So, I have traded the stocks from the short side. That is, when I say traded the stocks, I trade the broad stock indices and the futures and options markets. We've had three sort of sharp rallies. The kind of thing that I like to look for is when the market has a hard sell-off, bounces back, and then fails and starts to roll over again. That's when I like to get short. We've had at least three of those opportunities. Then again, maybe at the big picture side, we've had years of central bank money printing, underwriting, in effect, the rally in stock markets around the world, and stock markets around the world have been falling in the last few weeks. And that's changing with the central banks. They're just not going to be doing that as much as before, and that changes things. And here's another one. For the last 9 years or so, the dividend yield on the S&P 500 was greater than the yield on the 2-year Treasury bond. So in a way, that kind of was pushing people to go out and take greater risk in the equity markets than buying government securities. Well, now that's reversed. The 2-year yield is above the dividend yield in the S&P, so it kind of is opposite that acronym that said TINA. There is no alternative. You got to be in the stock market. Well, now there is an alternative. So since the end of January, basically with my short-term trading, I've made money mostly in just two markets, and that's being shorting the stock market and shorting Canadian dollars.
We'll have more with Victor Adair right after the break.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features to our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
I'm Bill McWilliam, President of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Welcome back. We're speaking with Victor Adair. Victor, are rising interest rates, especially in the U.S., one of the reasons for the stock market weakness?
Absolutely. That is, I call it a big picture reason. I mean, it's not new. People have known this for some time, for instance, the Federal Reserve is actually reducing the inventory of debt that they have taken on while they've been having an accommodative monetary policy, while at the same time, the United States government is going to be selling more bonds than before to finance the deficit that they have. So somebody's got to buy the paper, and, in a normal supply and demand picture like that, yields rise. So I think rising interest rates have been part of that, at the big picture way of looking at things. But at the same time, here the last 2 weeks or so, the bond market has caught a bit of a bid. In other words, yields have been falling as people are maybe backing away from their involvement in the stock market and putting money into the government securities market. And so in a sense, yeah, rising interest rates have made a change, but in the very short term here, actually interest rates are falling as the stock market's going down.
With Jerome Powell as the new head of the Federal Reserve, is he going to be pushing for higher interest rates?
I think so. I think that is also the consensus opinion. They kind of lay out in front of them what they're going to do for the next year or so, what they plan to do, so the market's not blindsided. Maybe also Powell, like Greenspan and like Bernanke in particular, both of those guys were tested very quickly by the market when they first took on the job as head of the Fed, and maybe the action, that we're seeing here in the stock market is a bit of a test for Powell. I think the street probably likes Powell in that he's maybe less of an academic than Yellen. It seems to be maybe a more practical, plain-spoken guy. But anyway, I think he will be taking the market, or at least the Fed will be following the market to higher interest rates in the future. Yes.
The U.S. dollar's been falling against many other currencies over the past year. The U.S. dollar index is down about 14%. Do you see the U.S. dollar continuing to fall?
That's really the $64,000 question as far as I'm concerned. I've traded currencies for 40 years, and there's been some enormous swings in that time. And one of the things I've observed with currencies is that the trends just go way further than you think makes any sense before they turn around and go the other way. But, just for instance, we got the euro right now at about a 3-year high. The same thing for the Singapore dollar and the Chinese yuan. Those two obviously with the yen. I kind of watch to get the flavor of how things are going on in Asia, and the euro kind of takes care of Europe, and then there's the U.S. dollar. Back in 2016, there was a G20 meeting in Shanghai. There's been a lot of speculation that there may have been a sort of behind-the-scenes deal done in Shanghai. Let's call it the Shanghai Accord. That would be something similar to what happened back in 1985 when they had the Plaza Accord. The Plaza Accord came after the U.S. dollar had about doubled during Ronald Reagan's first term as president, and basically the deal was, hey, we're going to coordinate amongst the various central banks here and help get the U.S. dollar down. So, we had the U.S. dollar at 14-year highs around the time of the Shanghai meeting, so perhaps there was some sort of a deal to get the U.S. dollar down. I'm not sure of that, but you kind of look at the timing, and maybe there's something to it. The thing is, I have been bullish of the U.S. dollar for the last few years. I develop a bullish bias. I understand that. So I have been watching for opportunities to trade the U.S. dollar from the long side. There haven't been many. At the very moment, Drew and I, through an account that's my son Drew, manages some of my money in his managed account program. We are owners of puts on the euro. The euro has been trading in a very narrow band sideways here for 2-3 months, and we're thinking that if it falls out of that range, it could go some distance. But right at the moment, I don't have a big bet one way or the other on the U.S. dollar against other currencies. Now, the Canadian dollar is a different story, and I've got some positions there. I'd say this: if the fear and volatility that we've seen a glimpse of here in the equity markets the past 6 weeks or so, if that intensifies, especially on a global basis, I think that really puts a bid in the U.S. dollar. So in other words, if the capital markets get fearful, money comes back to the center, and the center of the financial universe is New York.
We'll have more from Victor Adair about the Canuck Buck when we come back.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink CYDVF, and on Frankfurt C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Victor Adair. Victor, the Canadian dollar, I thought would be doing better right now considering the U.S. dollar's been coming down. And the price of oil stayed very steady over the winter, yet the Canadian dollar fell. Why?
Well, let's say there's three main drivers to the value of the Canadian dollar. One is the relative strength or weakness of the U.S. dollar. The second is the interest rate differentials between Canada and the United States. And the third are commodity prices. I remember years ago at presentations I would do at conferences, I put two charts up on the board. One would be like a multi-year chart of commodity prices. The other would be a multi-year chart of the Canadian dollar against the U.S. dollar. And I'd say, look at these two charts. Can you tell them apart? Well, you can't. They're very, very similar. So commodity prices have a big bearing on the value of Canada. Since 2011, when the commodity market topped out and fell, and as my friend Eric likes to say, we had a brutal bear market in commodities from 2011 down to 2016. We had also a pretty brutal bear market in the Canadian dollar. So with Canada here, I mean, just in the very short term, for the last 6 weeks or so, let's call it 8 weeks, Canada's been down 5 of 7 weeks. We've lost about 6% against the U.S. dollar since the end of January into mid-March. And I need to make the point that Canada's been even weaker against other currencies, whether it's the Australian dollar, the Mexican peso, Japanese yen, the euro, on and on and on. Canada's just been very weak. So from time to time, there are other factors besides the U.S. dollar, interest rates, and commodity prices that play on the Canadian dollar. And I think certainly recently some of those other factors have been NAFTA and worries just as to how much or whether or not that's going to impact Canada. The housing market we have in Canada, a lot of the world is looking at us and going, really? Really? So I think there's some concern about that. Anyway, Canada has traded down the last week or so. It's steadied here. As I said earlier, I've made some pretty good money being short Canada, so I've got a bearish bias on Canada, and I guess those are the reasons why.
The strength or weakness of the U.S. dollar has a big impact on the price of gold. What are your thoughts on that precious metal?
Yeah, gold has really kind of had a struggle here in the sense that we have not had the market above $1,400 an ounce for 5 years now. It is up $250 from the lows we had in December of 2015, and I think those were about 6-year lows at that time. But just here the last couple of days, I mean, gold is down today $35 from yesterday's highs. It looked like it was going to take a run for the roses and boom, just come right back down again. So, I would say this, gold is kind of up and down lately, almost in lockstep with the euro US dollar, exchange rate. So, I think it's this short-term, I'm calling it a bottoming process, I think, that may be going on in the U.S. dollar markets, kind of keeping a lid on gold. And certainly if the U.S. dollar does take off to the upside from here, that would not be good for gold. I said, we've been short of, we own puts on the euro. In other words, we're short euro. If it hadn't been for that, I would probably want to have been trading gold from the short side, but I just didn't need the concentration risk.
The price of crude's been very strong lately, with West Texas crude above $66 a barrel earlier this week for the first time in 3 years. Do you think that price trend is going to continue?
Well, I'll tell you, at the very moment I own some puts on crude. I bought yesterday after the market failed to make new highs. It had made a high on Monday, but struggled yesterday. But I will say this, I'm very cautious with crude in terms of being short, so I'm buying some puts. On the one hand, I'm very aware that we could have an explosive geopolitical event, that's the polite word for disaster, in the Mideast that could just blow the top off the crude market. So I just don't like to have the open-ended risk of being short futures on crude. And there's also a puzzle for me. I feel as though there is and has been a bid in the crude oil market that I just don't understand. And now to say this again, I'm operating with a bias. I've made some pretty good money the last 4 years trading crude from the short side. So you kind of keep going back to the scene of the crime, as it were. We've got what I call OPEC and friends, have got these cutback agreements. There is a worry out there, and I think there's some real plausibility to this, that with the new team at the White House, there's a good chance that the sanctions by America are going to get put back onto Iran. So that could take 500,000 barrels a day of Iranian production out of the market. You kind of have to expect some other barrels from some other countries might leak out into the market to fill up that void. And, certainly we've got Venezuela, just slipping away in terms of the amount of crude that they could produce. So those are sort of the bearish sides. On the bullish side, American production, another new high today. We're getting awfully close to 10.5 million barrels a day, with the forecast of we'll go through 11 million barrels a day in production in America. Right now, the shoulder season, the refinery maintenance period of time, and then we're switching from, call it the heating market to the driving market. There's also a huge, massive speculative long position in crude. So if prices, for some reason, were to turn lower, a lot of those guys could throw in the towel. So bottom line is, at $66 a barrel, it seemed like maybe we got a little ahead of ourselves, and I'm cautiously short, but I'm also careful because it just seems to be something that I don't understand going on in the crude oil market.
What's the general feeling out there right now?
What do you mean by general feeling?
Well, the markets are choppy. You don't know what's going to happen day to day. Donald Trump could announce World War III tomorrow in some 3 a.m. tweet. How does that affect somebody trying to invest in the markets right now?
Okay. Yeah, I mean, I see that sort of show up in so far mostly in the equity markets, maybe a little bit in the credit markets. I think there's probably what we would, in terms of risk on or willingness to take risk and wishing to not take risk, I think that the needle has swung a little in the direction of wishing not to take risk. So, that causes different things to be repriced. Riskier assets get cheaper, safer assets get bid. I think there's a sense of that, although, I don't think it's pervasive at all. I think people that are actively involved in the market see that, but people that are going about their day-to-day jobs, it's just not the lead item on the 6 o'clock news. Now, if this keeps up and people start, opening their monthly statements at the end of the month and go, holy jeez, look what happened to our account. Get the broker on the phone, then that'll change. But right now, it's, in a relative way, it's a tempest in a teapot in terms of the anxiety.
Victor, thank you so much for being on the show.
Well, Jim, always a pleasure to talk with you. Thanks for having me on.
My guest has been Victor Adair, co-founder of the Polar Futures Group. His website, polarfuturesgroup.com. You're listening to HowStreet.com radio. Find us on Twitter @HowStreet. If you have any questions for the show, you can email us at info@HowStreet.com. I'm Jim Goddard. Have a great Easter, everybody.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.